Hey guys, welcome back to the Carter Farr Show, aka The Wealth Wisdom, if you guys are watching or listening to us on Spotify or pretty much wherever you guys listen to podcasts. Now, guys, in today's podcast, video, whatever you guys are watching, we're going to be talking about something that I've really never talked about on the channel. It's going to be talking about congressmen and how they are really good traders, aka possibly doing something insider buying, insider selling to make a ton of money. So the first and one of the most well-known people is Nancy Pelosi. Now the reason why a lot of people bash her about insider buying or selling is because the max salary she has ever made is about $225,000, which is a ton of money, right? But did you know she is worth over $125 million, which is incredible for somebody that has never brought in more than, 250 grand a year, and she's worth hundreds of millions of dollars. That is insane. Now, one of the main reasons why a lot of people really bring up insider buying or insider selling or whatever you're doing is because she has been known to buy. Like a clear example is she bought Netflix. Now a couple weeks later, Netflix released a deal that they're now entering video game space. Another example is she bought Nvidia, and then the government's working on semiconductors with them. And obviously, anytime they announce some sort of good news, the stock price skyrockets up, and she will buy and then she will sell. And she has made money hand over fist. Also, I think we all know when it comes to investors, one of the most common people we think of is Warren Buffett. The reason why is he's historically beaten the S&P 500. And for those of you that don't know what that is, the S&P is pretty much, it's like a market index, so it pretty much represents the top 500 companies in the United States. A lot of people use it to get a gauge of where the market has gone and will continue to go. But when you hear the expression, oh, the market fell 2%, in most cases they're referring to the Dow Jones or the S&P 500. Now, the S&P, a ton of people invest in it. It gets an average return rate of 10%. You don't have to worry about it or manage it. And on top of it, it's like one of those things that, those world-class traders, they try to beat the S&P. Now, the issue is only about 85% can actually beat it. And then of that 15% that do beat it, about 10% don't beat it the following year. And then, of that 5%, those are like the 5%ers, Paul Tudor Jones, Ray Dalio, all those world-class investors. Now, Warren Buffett has beaten the S&P. His average return rate is 17%, which is incredible. For how long he has been doing that, that's an incredible rate of return. And it doesn't come at a huge surprise why he's worth billions of dollars and why he's notably one of the most best investors of all time. Now, Nancy Pelosi, her average return rate is 31%. 31%. And her job isn't even to pretty much manage money at all or invest. She is, Speaker of the House, she's in Congress or whatever she does. But anyways, I just find that incredible that she is a better trader than Warren Buffett. Which is, it's insane. Now, the reason why Warren Buffett has made so much money, because he's had some notable picks, like he's done very well with Apple. He's done very well with Coca-Cola. And that's why he's made a great return. Now, Nancy Pelosi, and obviously he's funded by billions of dollars as well. But Nancy Pelosi, 31% historically per year. Guys, the S&P 500, the best year is 36%. So she is performing almost as good as the best year of the S&P. Now you tell me there's not something fishy going on. I'm not saying anything. I just find it crazy. But one thing is she is not a better investor than Michael Burry, who I think he was the guy that pretty much shorted the 2008 crash, known for the movie The Big Short. Made a ton of money off that. But anyways, I just find it crazy. And a lot of people think that, investing is so easy, beating the S&P 500 is so easy. Guys, it's incredibly hard. In order to do that consistently for decades, like Warren Buffett has done, Nancy has done, it requires so much time. And like I said, 85% of the people that try, so these are like those analysts that you probably see on YouTube or on TikTok or even the news that tell you what stocks to buy. Guys, they don't know what they're talking about at the end of the day, because 85% of people and traders and hedge fund managers can't even beat the S&P. So my recommendation, if you're looking to invest, the best strategy, honestly, for like 99% of you is to dollar cost average. So dollar cost averaging is just investing consistently over the course of a time period. So instead of putting up like $1,000 and investing a ton of money into Apple or whatever, or the S&P, what you do is you invest, like, you could invest $50 per week. Now what this does is it develops a good average price, because you don't have to worry about the stock market being overvalued or undervalued, or even a crash coming. And you're just investing consistently. So if the stock market does crash, honestly, that does a benefit to you, because you can just buy these prices at a lower price, compared to if you dumped, a one lump sum investment. So you just dumped a ton of money into the market all at once. What this does is, one, you have no funds, so if the stock market does crash, you can't buy those dips. Dollar cost averaging, you're just investing consistently, so once the stock market does crash, you're buying those dips, so once it recovers, you make a lot more money. It's a better way to invest for the long run, in my opinion, and I believe that it's better to invest dollar cost averaging into like growth stocks, so like companies like Google, Microsoft, Tesla, the companies that, are a little more volatile, so that they're going to go up and down at a little more rapid rate. But the absolute best investment advice is honestly super simple. It's opening up like a Roth IRA with like Robinhood, because you can get that 1% match. So most of the time you'll need like some sort of like employer to match, some sort of 401k or IRA. Well, with Robinhood, they'll match it at 1%. So, you bring in, for every $100 you bring in, you get $1. Now that will add up over the course of 40 years. If you guys invest for 40 years, that will add up to thousands of dollars, which is awesome. So not to mention, so you open up that Roth IRA with Robinhood. I'll put it down below so you guys can sign up. But you open up that, and then you just invest. You set up auto invest into the S&P 500. So like SPY, ticker symbol SPY, or VOO. You just want to make sure it's a S&P 500 index or ETF, either one, and it just has a low expense ratio. Keeping it under probably 0.5%. You guys will be all right. That's by far the easiest way to invest. IRA, S&P 500, dollar cost averaging. That's it. People love to make it this huge deal that investing is so hard. You got to buy low, sell high, you got to trade. No, most of you guys can't even trade. The average day trader, the average person that can day trade loses money 98% of the time. So of that 2%, that's incredibly rare, and it does happen, but in order to do that for a decade, it's incredibly hard. So most of you, the best advice that I would recommend, if you cannot do what Nancy Pelosi does, which I don't even know, I don't know if she's insider buying or selling, but most of you guys, dollar cost averaging, the S&P 500 will be the best investment advice anybody could ever hear. If you're 18 years old or 50 years old or 60 or 70 years old and you want to invest, S&P 500, and then once you get a base, of maybe a couple $1,000s, then start dabbling in some growth stocks. Throw in some Tesla, throw in some Google. Whatever you believe in. If you love technology, invest into technology stocks. If you love artificial intelligence, invest into that. If you love, whatever your thing is just invest in it. You'll know better than anyone. You'll have a better rate of return, and you'll still have a base of money that if something does happen to that sector that you're investing in, you're gonna be in a great spot at the end of the day, because that will compound on itself. And another little tip, I know we're kind of just talking a little bit about everything, but that's what I kind of wanted this podcast to really be about, is just kind of flowing. I don't want to pigeon myself or trap myself in a corner only talking about Nancy Pelosi because I just found it crazy. I wanted to talk to you guys about it. You know, maybe we'll do some sort of live podcast and you guys can ask me questions. That would be awesome, but we'll have to figure that out. We'll probably have to do that on YouTube. But anyways, what was I talking about here? So having a good base, and another little tip is to have a broker that offers DRIP, which is dividend reinvesting. This is a great way to compound your account, to build it up. What you do is all the dividends you get, you just reinvest them back into the business. You reinvest them back into the stock market, into the company. So what that does is it slowly compounds on itself. So maybe the dividend you get one year is $1. Okay, then the next year it's $2, then $4, then $8, then $16. So this will compound on itself, and before you know it, you have this massive snowball effect where, you know, have you ever pushed like a little snowball down a hill in Michigan where I live? We do that often. But what that does is it slowly, you know, starting out, it's tough building the snowball. You know, you got to pack everything together. That's building the base. Building the base. Now, when you start pushing it down the hill, it's hard, but then the more snow and stuff you get in it, the easier it gets, but the more it picks up. So investing is like the same way. You know, you just got to start. You got to have a broker that has DRIP, so you're just soaking in as much money as you can, and then just continue the process. Consistency is another super important thing. But yeah, I wanted to come on. I wanted to talk to you guys about, you know, whatever you guys want me to talk about. Let me know down in the comments. But I mostly wanted to talk about Nancy Pelosi and how she's a better investor than Warren Buffett, guys. So we'll see you guys later. Hope you guys enjoyed the podcast. If you guys did, hit that like button. Subscribe. If you guys are new to the channel, new to the team, we talk about everything money, stocks, money management, trading, investing. So subscribe, join the team, and we'll see you guys later in the next one. Take care, guys.